Hello, ladies and gentlemen. It's Modern Investing on Pod TV. My name is Sasha Star, and today's guests we have Dr. Milan Sombarak. Welcome to the show, Milan.
Thank you for inviting me. Delighted to be here.
Great to have you. And Jim Ead from Ead Foundation. Welcome to the show, Jim.
Thank you, Sasha. It's great to be here too.
Yeah, great to have you. And so stock market today is tricky because the high tech stock were suffering, although I think it's getting a little bit better as the day progressing, but we'll see what's happening at the end of the day. The very interesting movements the way I see it, at AMD, which Jim, I think you're following, and it went down on earnings, and now it's recovering nicely. And Nvidia went down as well in the morning, and now it's also type of trying to recover. But I wouldn't worry about those two various reasons. And how you feel, Jim, about this situation in the market?
Yeah, I think the stocks that you mentioned in particular, but in general, high tech has been taking a beating today because the earnings announcements were very, very good, but they weren't as high as people expected them to be.
Yes.
So, that's a kind of a luxury problem to have. They made a lot of money, but they didn't make as much money as they thought that people thought they would. So their stocks are getting beaten down a little bit. But I see no reason to back off of these stocks because they're clearly very profitable. And, I expect that to continue. I see no reason why it wouldn't continue.
Another stock which I turned my attention already to is Boeing. Is The results were quite impressive, and don't forget that they have enormous orders for the
Yeah.
next couple of years. Milan, what do you think about the Boeing situation?
Well, what I saw recently about Boeing, just before I comment on Boeing, let me ask you this. The S&P 500 is down a little bit, while the Dow Jones Industrial Index is up a little bit, and they represent really a very similar type of investment.
Okay.
So what did that tell you? Now,
Um,
uh,
it's difficult because Dow Jones is the 30 biggest companies listed on New York Stock Exchange.
right.
And S&P 500 is a 500 company, which include Magnificent Seven. And as you know, in the last few years, Magnificent Seven was the locomotive of 500. So 493 companies are not performing that great at all. It's Magnificent Seven, who are bringing all this S&P complex up. And because these Magnificent Seven are not representing themselves in the Dow 30. So therefore, S&P 500 surprisingly has a better potential, or most of the times, not always, but most of the times, than Dow 30 stocks. Top 30. And perhaps in this environment, probably if you don't want to concentrate on one or even handful of stocks, is Nasdaq 100 index, because that includes all Magnificent Seven plus some other mostly high tech companies. So, okay, it should be, and it is more volatile than
Yeah.
Dow and obviously S&P 500. That's
Yes.
close by the territory. But if market is strong as it's now, and probably it will be the same in next at least 2 months. I don't know what will be beyond that period. We'll see, but I think in the next 2 months it still will be quite strong. So maybe if you don't want to bet on individual stocks, which you don't recommend, and I do recommend, but it doesn't matter.
You're
As
both right.
we are both right, and Nasdaq 100 represents at least alternative to S&P.
About Boeing, Sasha, it's very interesting because we were talking about some of the stocks that made a lot of money, but not as much as people predicted. Well, with Boeing, their losses were not as great as people thought they were going to be. So now the stock is going up.
Well, the most interesting thing about Boeing is when you take a look at what analysts are saying about them, Morningstar analysts are the only ones that we should be listening to, because Morningstar analysts are totally independent. All other analysts are basically salespeople working for some uh, investment bank. So we shouldn't listen to them at all. The Morningstar analysts are all recommending Boeing as a very safe stock, and they're all saying it's a buy. Nobody is recommending a sell. And primarily that's due to the fact that Boeing has on its books a huge number of orders, which will translate into billions of dollars in the next 2, 3, 5, 10 years. So Boeing is a good place. If you're going to buy individual stocks, Boeing would be a good choice. But since I have the floor, may I make a couple of comments unrelated to Boeing or the market, or actually, yes, related to the market? I'd like to talk briefly about frictional costs, which we don't talk about enough. Let's assume that all investors in North America own an equal number of shares of the American economy. And they can do that by owning SPY, which tracks the S&P 500. And all investors own an equal number of shares. Then all investors would be getting wealthier with fluctuations. All investors would be getting wealthier at the same pace, mathematical certainty. And that happens to be a little over 6% annually inflation adjusted, and it's been like that for over 100 years, likely to remain that way. And so we should all live happily ever after, because knowledgeable people are recommending that we live on 4% of our portfolio. So if we start saving early enough, the minute we get a job, save 10% of every dollar we ever earned, and do that through our lifetime, by the time we're retired, the portfolio will be large enough. We should have somebody standing by to pick us up off the floor. That's how large it's going to be. Unbelievable. So then we start living on 4% of that, but the market has grown at over 6% inflation adjustment. Just wonderful. But then a group of fast stockers comes around and tries to convince people, and they're able to convince some people that they could do better than their neighbors if they buy certain securities and sell them some other securities. And these fast stockers will make the recommendation, and they will complete the transaction for a very small fee. Now, collectively, all individuals are getting rich at the same rate, minus the fast stockers fee. But certain individuals are getting wealthier faster than others who are losing. It's really a zero-sum game. When you buy, sell stocks, it's a zero-sum game. They're winners, they're losers. So after a while, people notice that they're not doing as well as the market is doing, primarily because of the fast stockers fee. So then they turn to advisors and money managers and pros, in quotation, pros, and this and that, which adds additional frictional costs to them. And so it has been estimated that the frictional costs are costing investors who trade actively, frictional costs alone are costing investors 20%. For every dollar they put into the market, they're going to lose 20 cents because of frictional costs. So some of these people in desperation turn to hedge funds, which promise huge returns. Now, hedging, what does hedging mean? It's important for us to understand that it comes from farmers who used to put a hedge around their sheep yard, around their goat yard, around their cattle yard. They put a hedge around it to protect them from wolves and lions. That's what hedging meant. Hedge funds are anything but hedge funds. They have fewer restrictions than other types of investments, so they can engage in very risky investments, which sometimes gives them enormous returns, but they all flame out and disappear in the long run, unquestionably. It has to happen. And so they call themselves hedge funds. They call themselves private equity, which isn't anything that they are. Our commercial banks are not even allowed to own hedge funds because the banks are required to be conservative. They're not even allowed to own hedge funds. So you know you have a typical example would be say long-term capital management a few years ago that took $1. If you put $1 into long-term capital management at its beginning, I think it was 1999. I'm not sure. It doesn't matter. And held it for 2 years, it would be over $5. And then it tanked, totally tanked, and went down to zero. The federal government had to convince 14 banks to put enough money to prevent long-term capital management from failing. It was too big to fail because they were afraid they would start a market panic. So we have to be aware of frictional costs, and the best way to avoid frictional costs is to buy the S&P 500 by buying an exchange-traded fund which tracks it, and SPY happens to be the best choice. It's the oldest, the largest, the narrowest bid-ask spread, and so if people would buy SPY and just live with that and nothing else, they would do very well if they start saving early enough in life, 10% of income. By retirement time, they could do very well. So we have to pay attention to frictional costs. The individual security selection doesn't work most of the time. It does for market wizards. There haven't been many. Most of us are not market wizards. And so we shouldn't even do that, buy individual stocks, except perhaps if we have a fund portfolio. Two things about that fund portfolio. It should be small enough that if it's totally wiped out, we don't have to start eating cat food that would survive its total disappearance. So that's conservative. And the second thing is don't keep track because you will be disappointed almost for sure.
Milan, one request to you. Could you a little bit quiet your guests because it produces a background noise of talking and something that we can't escape. Or at least tune yourself down when you're not talking. Okay?
Yeah, okay. I'll excuse myself a second.
Okay. Would you like to comment on what just Milan?
Well, I was going to say something else entirely in that we also have to pay attention to things like Trump actually had a worse day. I mean, Elon Musk had a worse day than Trump did in terms of penalty. He was given $56 billion by his corporate board, and a Delaware judge just said, no, that's excessive. There's no reason for that. So losing $56 billion is worse than getting a judgment against you for $83 or whatever million it was for Trump. And that has some effect on Tesla's stock. I was kind of thinking that it would be optimistic and that it went down a little bit, 4% maybe, or I'm not sure how much, but in any case, because I used to own Tesla, I don't anymore. But that's also another factor, the frictional costs that Milan was talking about. I absorbed that without thinking about it because it's minor compared to the amounts of money that I'm trying to make. And although I do invest in index funds, but I also in my fund portfolio want to enjoy the pleasure or pain of picking individual stocks based on my experience and knowledge. And I do believe that I've demonstrated a track record of success. But if you're, not having success, maybe it's time to have another hobby. But if you are successful, why would you stop? So I think it's just very enjoyable for me to be watching for opportunities and trying to seize the moment when they present themselves.
You are successful, James. If you're a market wizard, you're successful. Most people are not market wizards.
I agree with you.
I would not recommend. You would not recommend this for everybody, would you?
No, absolutely not. I would say, and also if you try it and aren't good at it, I'd say recommend a new hobby.
Exactly. And I don't know if it's right for us to give people advice to invest only in S&P 500 because I don't understand why would they listen to our program at all. Because it's an obvious thing that any moron can invest in S&P 500 and make a little bit of money. But Milan, previous to your comment, I don't understand where you're saying is that on one hand, it's a zero-sum game. So there are some winners and there are some losers. But if all people, let's imagine that 100% of investors have nothing but S&P 500, no individual stocks, no options, nothing, just S&P 500. In a market like that, obviously S&P 500 is moving up. So we have all 100% of winners and zero losers. Would that be correct estimation, or I'm not getting something?
I don't think that I am getting your question, Sasha. Could you rephrase it somehow?
Very simple. Let's imagine that 100% of all investors put their money in S&P 500.
Okay, let me comment on that. Wall Street would hate that,
No,
particularly.
I didn't ask. Sorry, I didn't ask whether they hate us or
Okay,
love.
okay.
No, I don't.
I'm just commenting, and we should have.
I'm completely, when you're saying that Wall Street doesn't like or likes it, I the same things that you tell me whether my butcher likes me or he doesn't like me. I don't care about that because all I do transactions. I buy.
If all investors,
I don't know
if
about
all investors invest in nothing but the S&P 500,
right.
the vast majority of those investors would be doing better than trying to beat the S&P 500.
That's not what I asked you. No.
Would they all be winners though? That's the.
There would be winners to the extent that the American economy is a winning economy, as it has been for 200 years.
Milan, that's not what I'm asking. I didn't ask you whether it's 200 years or 185 years or maybe 317 years. No, I didn't ask you. I'm not interested in that. What I'm asking you, a hypothetical question, that if all people follow your advice and invest into nothing but S&P 500, period, no individual stocks, nothing else.
Right, yes.
Does it make sense that in a market which is going and rising every day almost, all of these people, 100%, will be winners and there will be no losers? Is it granted?
Yeah, that's absolutely. Yeah.
Okay, great. So it's not zero-sum games. The stock market investing is not zero-sum game.
Investing is not zero-sum game if you invest in the entire stock market. It's a zero-sum game if you start picking individual stocks.
I don't think so, because if you take a stock like NVIDIA, let's not discover other stock, but AMD, you can talk about in the same terms, and many other stocks, CRM, so on.
Okay. So you pick a stock like NVIDIA. Who are you buying it from?
I don't care.
You're buying it from somebody who's selling it. You're buying it from the seller.
Why would I be concerned from whom I'm buying? I'm buying from Mr. Johnson, from Mr. Ericsson, or from Mr.
You're right.
Why would they care whom I'm buying from?
You're quite right about that.
Some people, for example, very interesting example, Boeing, doing fantastically well. But if you bought Boeing a few weeks ago at 250, you would be a loser. You would lose 25% of your investment.
You have to make
what is your Morningstar advisory? Your Morningstar made me lose 25% of my money. So what I'm going to do now?
Sasha, we have to make a distinction between short-term investing and
so you have a red on your screen, you're losing tens of thousands of dollars, but now you became a long-term investor. You are going to lose your money next year and next 5 years, but you are long-term. That's what it is. Thank you, Morningstar. I'm a long-term investor.
Sasha, I don't know whether it was J.P. Morgan or Rockefeller or somebody who said when he was asked what will the markets do, he said, they will fluctuate. So we have to accept the fact that the markets will fluctuate on their way upwards in the American market. I'm not talking about the market in Kenya or in Albania or something. American market.
Morningstar doesn't make comments on the Albanian stock market, but they are great at their comments on U.S. stock market.
Yeah,
and
right.
on U.S. stock market,
Well, let me pose a different question. If everyone was involved in owning just the index fund, where's the market? Who's buying and selling in that case? And so wouldn't there's no market makers anymore? The whole financial system is based on people buying and selling individual stocks. And so the S&P, if everyone was invested in merely the index fund of S&P 500, I don't see any reason for a stock to go up or down.
A comment I'd like to make about market makers, if for sure, is they're making way too much money for what they do.
Well,
we can discuss that at some other time.
Yeah.
But when you're married to the American economy as a whole, which has been the best market in the world for over 100 years, close to 200 years, why would you want to do better than that? When the chances of you doing better than that, history shows, are very slim. People doing better than the market are market wizards, and there are very few market wizards out there. There are very few Mozarts in music. There are very few market wizards in investing. We can't recommend that except in a fund portfolio. And like I keep saying, most people shouldn't keep a track of their fund portfolio because they'll be disappointed almost for sure.
It's not any fun if it's not a fun portfolio, though. You got to try.
Right. Right.
Speaking of fund portfolios and everything, I just had a quick question for y'all because there is a major investment. It seems to me like this is a wasting money because y'all talk about a fund portfolio and everything, but there is a major event that's not going to take place this weekend, but it's going to take place next weekend. It's called the Super Bowl. And I was seeing how much these tickets cost, and I was going like, wait a minute, that sounds like a big waste of money because the average ticket to the Super Bowl this year will cost $9,000, which they say is 1/7 the U.S. median income in 2023. So these people apparently have a lot of money to waste and probably are wasting some money that they don't have. And they're saying the average cost to a 30-second ad will be $7 million. If you want to drop an ad on the Super Bowl, it's going to cost you $7 million. And there are going to be some people that are going to be making some crazy bets, including what color Gatorade will be dunked on the winning coach and all along those lines. So I do know that this is a major event. It's one of the biggest gambling events of the year, along with the whole notion of the college basketball, which will be coming up in March and everything. So I just wanted y'all's thoughts on this, because a lot of people will be wasting money that they probably don't have and everything.
Well, Mark, you'll appreciate this because my father-in-law grew up listening to a radio station, a local radio station that carried, it played music, it did news, it carried sports. Right now, it's devoted entirely to sports betting.
Mm-hmm.
Sports betting has become an industry.
Yes.
And, how you play that to make money, I don't know. But there's no question that just the people that aren't playing the market are betting on sports.
They're betting on sports, and they're betting on some crazy stuff. I don't know if Sasha saw this, but there is literally going to be some people that will be betting on the length of the national anthem and the results of the coin toss. So we
and
all
there's
know
no S&P 500 for sports betting. There's no index fund for sports betting.
I'll tell you how I made some money on the final match of Australian Open.
Mm-hmm.
I am doing bets on Bet365, and
right.
Okay. So before the match, I put one sum of money on the Medvedev, and the odds were like 3.4, and on Sinner 1.36. So Sinner was by far the favorite in this match. So I put equal amount of money on both sides. Now they have interesting rules that if one side leads 2-0, they pay your winnings in full.
Oh my goodness.
So after 2 rounds, after 2 sets, I was paid in full on my bet for Medvedev. And now I still have a free ride on Sinner. Of course, I'm losing that bet, but I'm already won my bet on Medvedev. And guess what? Sinner wins 3 sets in a
That's in
row.
a row. Yeah.
And I was paid on Sinner as well. So I made both sides winning, both on Sinner and Medvedev. That's how you make money on sports bets.
Hey, you got a great system there and everything. They've come up with a very unique idea. Jimmy
Coming
Jones,
back from 2
but
cents
they've
down
come up with
doesn't happen
something.
often, but it pays off.
It's
They
not
come up with something very weird.
Oh.
Weird. It's actually on Forbes Betting, where they're literally creating something called Super Bowl squares. So it looks like it's a bingo game, and you will be guessing as to what things are done in terms of who scores the points and a number of things along those lines. But it is definitely set up just like the bingo squares, with 10 rows going down one way and 10 going the other way. So as I'm looking at it, it looks just like the whole notion of bingo. So they're going to try to make some money on this.
What did you say the average ticket costs, Mark? What did you say the average ticket costs?
The average ticket cost of the Super Bowl is $9,000. They said that is 1/7 of the U.S. median income in 2023.
Yeah.
Taylor Swift is probably comped.
Yeah, I'm sure Taylor's comped. Travis has got that covered.
The ads that you're talking about, the ads and how costly the ads are. Ads often, well, actually most of the time, are better than the program they're connected with. I have a son and a daughter who are in the movie business, and they're shooting ads. And they once shot an ad for one of the automobile companies. I forgot which one it was. It took them a week to shoot, and it was a 30-second ad.
Wow. But the Super Bowl is famous for that. There are people that watch just for the ads. They're not really interested in the football games, but the ads are so interesting or cute or whatever it is that is attractive to them.
And what people forget is that sometimes.
People,
What people forget sometimes is that some of the ads, I mean, yes, those codes I talked about were the national ads, but some of the ads are also done locally. I remember several years ago, some friends of mine did an ad for Duke Hospital, Duke University, and the hospital that is very nationally recognized, but it was shot and shown during the Super Bowl, but it was shown in the local segment. And that commercial was not that kind of expensive that I was talking about, but it also was not done cheaply either, because they definitely got some money to do it, and it was shot like maybe about 7 or 8 years ago. It was definitely prior to the pandemic and everything, because I actually got to play a role of being dressed up as a doctor. So I literally remember being in that white suit and everything, as I was just in the audience in like a teaching environment kind of setting and everything. So if you look closely, you'll see me stuck there as a dot somewhere in the ad and everything. But the
I'm
maker
following European soccer on a specialty channel, Fubo TV, Fubo. It's a paid channel. I'm paying, I think it's $35 a month. And it shows all varieties. It shows all English Premier League matches, Italian games, German games, and many other stuff. Also, they have some television programs, but I don't watch those. And it's all ad-free, very high quality broadcast, and very good commentaries and so on. So that's what I'd like to watch.
If it's all ad-free, how do they make money off of the viewers then?
Subscriptions.
Subscriptions, of
So
course.
like me,
Of course.
subscription.
that's what a lot of people are doing.
They could show some ads between the games. For example, English Premier games, for example, one Saturday, for example, starts 7:30, finishes at approximately 9:30. Next game starts at 10. So in this half an hour, sometimes they do comments about the upcoming games, sometimes a few commercials here and there, but nobody is bothering to watch this half an hour anyway. So then you start, next game is around 10 o'clock in the morning. I'm talking about our time. So your time, Jim, would be 7 in the morning, a little bit early. Yeah, but the highest quality broadcast, it's, in English Premier League, they're using 12 cameras to follow the match. 12 cameras at different angle, and they showed all kind of. It's so enjoyable. It's just incredible. I noticed even some games which are drawn, even 0-0, which is not happening very often, but sometimes it's still very enjoyable to watch. Another thing is, I sometimes I put a bet when I want to be protected 100%. Let's see a favorite playing some weaker team, so a good bet on winning for the favorite and on a draw, just to be more protected. And sometimes, more often than once, the favorite was leading 2-0. So you are paid your bet on winnings. And then for some reason, the other team scores 2 goals. So it's now a draw 2-2. And I'm winning both bets.
Yeah,
On
definitely.
Well,
winning.
you know,
And
Milan, it's like you often say here. It is there are in the sports betting world there are so many people who are losing,
Mhm.
and
that's true. That's
but
true.
there are sports betting wizards.
No, they're betting wizards. I'm not
How
one of
do you
them, but just really quickly, and I'm gonna bounce off.
Mostly, I
As I
advise don't do it, but nobody listens to me. They do it anyway.
They do it anyway, but I did see something. I'd love to hear y'all's thoughts before I bounce off. But I saw a new network because it is a popular new sport. They've got their own network as well, and I'm sitting there going like, "Who's going to invest in that?" But apparently, somebody is investing. Believe it or not, Sasha, there is a pickleball channel. Yes, there's a channel strictly devoted to pickleball. So there's a channel that will be devoted
What
to
power to
pickleball,
them?
and I'm trying to figure out who's going to invest in it and who's going to watch it. But there's literally a channel. I saw it advertised literally on the tennis channel because I went out to eat yesterday, and they were advertising on the tennis channel the new pickleball channel. So it's going to be a channel that's going to show you this popular sport of pickleball, and I'm trying to figure out one, who's going to watch it, and two, who's going to invest in it as well, because it seems to me that would be not the greatest investment, even though pickleball seems to be gaining in popularity.
Oh yeah, and if you're in the business of if you own a court and sell people the rights to it, would you want 8 people playing or 2 or 4 people playing? Obviously there's more people that want paid to play pickleball, and I'm going to be supporting that rather than tennis, which the tennis advocates can't stand, but the pickleball players are, they're winning.
Well, I don't think that very soon pickleball will replace tennis.
I don't think so either. But
I don't think it will happen. So you can very safely stick to tennis and other established sports, and let enthusiasts to concentrate on pickleball and some other stuff. I mean, there's a space for everybody. In the meantime, I would like to thank everybody for today's program and have a successful week of investing. And we'll see you same place, same time next week. Bye-bye, everybody.
bye.
Thank you. See you next week.
See you.